kick off in 2 minutes, folks. Phone is blowing up today. Go away. Kick off in 2 minutes, folks. Right, so blowing up today. That is YouTube. Let's see if we can get, yeah, no Facebook Live today. Just YouTube and Zoom. That's where it's at. I'm going to share my screen, so that's why I know Facebook. Right, 2 minutes to roll still. In fact, I should probably get my new t-shirt for this. I'll be right back. Check this bad boy out. It's a sloth riding a unicorn with rainbow laser vision. I quite like it. Right, let's see. Yeah, basically, there was late one night, about a month or two ago, I found a cool website which did all sorts of crazy outfits, and they all arrived today. So yeah, every live session I'm going to be wearing something ridiculous. I've got a cotton strand in my hair. I do indeed. Ah, thanks. Where's it gone? Ah, here it is. Right, let's do this. It's 12:30. Let's crack on. Sorry that we're half an hour late today. I had another round of golf. No good excuses other than, yeah, just playing golf. So we have a lot to talk about, and I'm afraid this is going to be a bit of an occasion where you need to pin your ears back and listen fast, because I've got a lot to talk about. And then I will go through the chat box once I've said my piece and got everything off my chest. And yeah, so where do we begin? I'm going to go all over the place, by the way. So I apologize, but yeah, let's crack on. I think the easiest place to start off with is my Facebook status. And for those, there's probably a whole bunch of people that haven't seen it, but it sort of summarizes a fair chunk of what I am. Yeah, so let's move this over here. Let's open this up. I'm going to just quickly read through this because it covers some of this stuff. And the things I really want to talk about today is not in this status. So basically, we have a 1 year bull cycle every 4 years. It's like clockwork because Bitcoin is mathematical, and therefore the stock to flow model is the only reliable thing that we can actually do. And so therefore, that's why I've been able to call certain things pretty well with Bitcoin. And what happens with these cycles is Bitcoin normally peaks in December during that bull cycle, and alts peak in January. That is one reason why I really don't give a shit about what happened yesterday, even though the paper value of my whole portfolio dropped $130,000 yesterday. But I really don't give a shit because I'm in this for the bigger picture. Yeah, whatever you think that happened yesterday, there's always a merry-go-round of bad news. And when things happen on the charts, journalists don't know anything and they just go, oh, it was because of JP Morgan or China, or it was a derivatives liquidation error, or, you know, it's something. But it really doesn't matter. It doesn't matter. What you can expect is on the run up to $1 million Bitcoin, we're going to see multiple 20 to 50% pullbacks the whole freaking way. In fact, all you need to do is just get up a chart. Here we go. Trading view, good old trading view. Get rid of this bloody log thing. Oh, go away, alerts. Here's a top tip. Do not use alerts on TradingView. They are dog shit. Remove all. And they don't shut up, even though there we go. All alerts dead. Right, let's look at Bitcoin. So this isn't like, if you're new to the markets, the crypto space, obviously this is like drinking through a fire hydrant that's chucking out heroin. It's not the best market to play with if you're a brand new person. However, what I'm going to do is bring us back to 2017, where basically everything that happened in 2017 is going to repeat itself this year, pretty much. So this was the bull cycle of 2017. So we had crazy growth, whoopsie daisy. It's like a 50% crash. Everyone shat their pants. See you later. Market says bye-bye. Crazy growth. Oh no, 20, 40, 50% correction. In fact, let's have a look. If we get this open, just take it from the top to that bottom, it was a 31% crash. And then it went, see you later, eventually. Oh no, here we go. There's the proper crash. How big was that one? So that was a 41% correction. And then the market went, bye. You got to be careful with Bitcoin. When we breach all-time highs, it doesn't do a Kobo. And what a Kobo is kiss off, bugger off. Normally you see a pullback to the resistance before it buggers off, but normally Bitcoin doesn't do that. And then we had crazy growth. I mean, even here you had like a mini sharp flash crash. What was that? That's like a 20% correction. Oopsie, doesn't matter. And then we had a much bigger one. And I remember this, September 2017, everyone was sitting on huge amounts of profits because don't forget, Bitcoin started at like $800, shot up to almost $5,000, and then completely wet the bed, and then had a 40% correction. And so many people sold out. I remember that. And it just went bye. And then it kept on growing. And then we had another flash crash. I'm going to drill this point here because it's a very good point. Another 30% correction. See you later. And during this whole thing, you have these crazy spikes. And every time there's a crazy spike, naive journalists will just pin it on whatever news cycles at present at the time, whether it is valid or not. 25% correction. See ya. And then it just ran up to the all-time high in December. As I said, Bitcoin nearly always peaks in December. Alts peak in January. And then we had the bear market or the consolidation. So this is no different. So if we fast forward to where we are now, starting from, let's call it January, we see crazy movement, all-time highs, multiple flash crashes like here. So we hit $41,000, and what happened? Everyone lost their shirt again. They just lost their mind. 30% correction, and then went bye, see ya. And now we're in this whole kerfuffle. And then this is a classic topping pattern. And then what if you look at what's happened right now from, I know, oh my Lord, what was it? From top to bottom, 53%, but where we are now, 38%. So this is not the end of the cycle. I'm 99% confident that this is not the end of the cycle. So don't worry. We've got plenty to go. That's why yesterday I put in another £60,000 sterling into crypto. Didn't time it at the best, but I mean, if you just look at what else did I top up yesterday? Like Kusama, etc. Yeah, so I sort of topped up halfway down. Didn't get the very lows, but some of them, I'm up 40 odd % already. Like ICP got topped up 40 odd % up. So, and today's a sea of green. Now, I'm not saying that, I mean, there's a genuine likelihood that this could just continue doing a bit of a dead cat bounce. So I'm not saying that this is the end of this downwards tumble, but at the end of the day, I really don't care. It's irrelevant. It really is. So, yeah, don't forget, a lot of the negative actors in this space are actually the biggest crypto holders themselves. When you have billions of dollars ready to plow into the market, getting hold of supply is actually really hard. So what do? You create a tree shake, you shake out all of the weak hands, and then you gobble up all of the shedded supply that the weak hands have done, sold and got rid of. And that's what you do. So I wouldn't be surprised if it's big banks, corporate entities, and miners just doing a bit of a tree shake to get rid of the newbies, because there is a massive influx of newbies that don't know what they're doing. So yeah, I mean, entities like Grayscale Investment have $35 billion plus of crypto. And MicroStrategies that has 90,000 Bitcoin. What do you think they're selling? No, they're topping up. So you just got to hodl. So there's probably going to be at least probably 3 or 4 more flash corrections on the way up to December. So expect it. Don't worry. There's going to be lots of whipsaw volatility. I think until Bitcoin gets a sort of $10 trillion market cap, we're going to still see that volatility. I don't see a 90% correction, but 50% correct. I've said this already plenty of times the last few weeks that a 50% correction of Bitcoin is still expected. But as Bitcoin runs up to sort of $10 trillion market cap, that's when we start seeing volatility dampen, because the bigger a market gets, the less volatile it gets. And the other key thing here is that this is a very important paragraph here. If you're experiencing mental distress and anguish from looking at the prices dance up and down, and even worse, making rash actions based on your nervous disposition, based on this price action, then you need to massively reduce your position size. You're simply not mentally ready to invest in crypto or even stocks yet. You need to assimilate more knowledge first, and also time in the market. Time is your friend. So until your emotional tolerance threshold is in check, just reduce the money you have exposed to the point you're mentally nonchalant about it all. Nonchalance is the secret investing superpower. It really is. You'll see things clearly through all sorts of shit if you're nonchalant about your investments. My portfolio has dropped over 100k sterling today, and I really don't care. The bigger picture / fundamentals haven't changed. Now I'm going to read this sort of back to front, because I want to talk about the first point last. So some bigger picture things that I always run my mind through. Are the total number of users in crypto still exponentially increasing, and therefore network effect still exponentially growing? Yes. Just look at any of the on-chain data and you'll see. A quick way to look at that is just look at total number of wallets. So if I've got Glassnode actually, so that helps. I've paid for the membership, so I get access to sneaky beaky charts that you guys don't have access to. But if you just look at the addresses, go to the top, just look at active addresses. Now, bearing in mind, if you take, Satoshi Nakamoto's wallet, he has like 1 million Bitcoin in his wallet or her wallet or their wallet from the Genesis block. So that won't be an active wallet. But even if you just look at active addresses just for Bitcoin, where are we now? We're sat at like 1.3 million addresses, and it's growing. Okay, so this is not petering off. This is a constant cadence. And when you know about compounding interest and exponential growth, all you need is a steady rate of growth to accomplish exponential growth. Take the human population. Humans only grow 2% per year, or 1.8% per year on average. Yet the human population is in exponential growth. And so all you need is a constant cadence, and you hit exponential growth over a period of time. Wallet addresses is the same. So as you can see, from 2010, it's just been growing, and it's going to continue growing. So going back to this bit, has Bitcoin finally been hacked, brute force or quantum based? No. Has China bombed or permanently shut down all Bitcoin miners in China? No. Over 65% of Bitcoin's hash rate is in China. Literally, if you actually wanted to kill Bitcoin or kill the price temporarily for a few months, you would just stop the mining in China, and it would probably take half a year for the rest of the world to take up the slack and get all the mining centers, elsewhere. There'll be huge delays and clogs on the blockchain, and basically everything would freeze for a few months, and therefore price would then crash. Has that happened? No, it hasn't. Has there been a solar flare? No, we're still talking to each other online. Definitely no solar flare. Are banks, billionaires, and countries still plowing capital in the space? Yes. Are the sea of ETFs still on track to launch? Yes. Are governments / entities still moving forward their abolishment of cash? Yes. Are the central banks still pressing forward with their CBDCs, central bank digital currencies? Yes. Well, chill the hell out then, folks. Buy the dip, borrow the dip, grab a chill pill, some popcorn, and let's chat again in December, when the price of Bitcoin of around $40,000 is a distant memory. Seriously, I get messages every single day going, what are my thoughts on crypto now? And it's like every week people expect like every week to have a new opinion on stuff, but it's rubbish. It's poppycock. You don't need a different opinion. You need to pull out your head out of the weeds and maintain the bigger picture. Now, what is the bigger picture? The biggest picture, the only question you need to ask yourself is this: is every central bank still rampantly inflating their currency supplies? Yes. Okay. That is the only thing. You can ignore everything else on the planet. Any tokenomic type issue, any FUD, and like ignore it all. Just answer one question: is global M2, so if is the global M2 money supply still inflating like nuts? Yes. Great. I'm hodling. Like I cannot stress this enough. The more freshly printed stuff that's coming out into the world, the higher it pushes the assets up, especially fixed assets. And Bitcoin is a disinflationary asset compared to global M2. Now, I want to sort of press on this fact a little bit more, and I want to sort of illustrate it a bit. So I did a bit of Googling, and I was curious because it's been ages, literally ages since I last did this. I'm trying to keep one browser with all my tabs. So, so I just did some Googling around like global M2, and it's really hard to find out what's, mind you, I've only done 10 minutes of Googling and preparation for this live session. So apologies. So I was trying to find what is the global M2 figure, as in what is the total amount of money sloshing around in the world. Now, everything Google pops up are just percentages, but that's not a bad thing. So here's this chart from, let's give them credit, Yardini Research Incorporated from May 7th this year. No idea who they are. But looking at the charts, I think they're spot on. So the top one's the only one I really needed, really. And if I zoom in a bit, it's global monetary growth, so M2, and it's a yearly percent change. So as you can see here, so yeah, from the 80s to the 90s, it started declining a little bit. But if you take an average, it's about 6%. If I was to draw an average line across this, it would probably be about 6%. Remember what I said, you only need a little bit of a constant cadence to accomplish exponential growth. And human population growth is 2%, and we're in exponential growth. So if you have something that's compounding 5% per year, you have ridiculous growth. Anyway, 5% for pretty much 20, 30 years. And then what happened in 2020? The world expanded its currency supply by 25%. Absolutely batshit crazy. This year is no different. They're going to continue. So the way you need to imagine currency printing is like, imagine you're at the top of a scary cliff. You're in the wilderness, you can't get down, there's no helicopter, you can't bungee jump it, you can't abseil, you can only climb down, right? Now, the easiest time to back out of that is at the top of the cliff, okay? Where you can, I don't know, wait for help or whatever. But let's say it's a very steep cliff. Now, the second you commit to it and start climbing down it, you can't climb back up, okay? All you can do is go down. Let's say there's no way to climb back up. You can get down, but you can't get back up because it's just a flat, wall. Now, currency printing for governments is exactly the same. So the first round of stimulus is always the hardest. It's like, should we, shouldn't we, should we, shouldn't we, should we, shouldn't we? Ah, fuck it, let's do it. And then they do it. And then they, pump in $1 trillion because of COVID or lockdowns, or it could be anything, war, whatever. But once they've done it, it's like drugs. They've had that first hit. The second hit's much easier. And then they do more, they do more, they do more. I'm a student of monetary history. Monetary history absolutely fascinates me. Just look at France, 1890 to 1896, with their big inflation / hyperinflation. Bulgaria, Zimbabwe, Argentina, Uruguay. Like, it absolutely fascinates me. And it always does the same thing. Always does the same thing. So, for example, I did Argentinian money. Yeah, so let's have a look over here. So, no, this one, Argentinian money supply. That's not the one I wanted. Where is it? This is the one. So, this is what Argentina is going through right now. It's pretty much in I would say this is big inflation. It's not hyperinflation yet, but it's still nuts. So I mentioned this before. Back in 1990, 1 peso, Argentinian peso, equaled $1. Then overnight, it went from 3 pesos to equal $1. And right now, it's about 95 pesos to $1. And can you see? So what is this? Is it done in millions? Oh, geez. So this, what is this? Oh my God. This is a million. So technically that's a trillion then. But yeah, it just goes nuts. And so they start doing little percentage growth, little percentage growth, little percentage growth. And then the moment you sort of get above 10, 20%, you then pretty much have to keep on doubling it every year. And it's just absolutely fascinating. To me, this is fascinating because if you really want to understand crypto, you need to understand this. And I'm going to try and hammer this down your throats. Sorry if I'm feeling a bit aggressive. I'm not feeling. I don't mean to be aggressive. I just want to hammer a point down. Okay, so just remember the shape of this. This is typical exponential growth curve. Now, global M2 is looking like this. Okay, it's not. We're not in the vertical bit yet. We're probably down here. You know, we're getting towards the vertical bit. If you look at the US monetary growth, it's looking like this. Have I got M2 up? Yeah. So here we go. This is the US M2 currency supply. I mean, just put it this way. I mean, something like 25% of all currency, US dollars, was created last year. It's just nuts. And so we're getting like this, and you cannot back down. The way that economics works is that the moment you start printing like this, you cannot get it back. There is more debt on the planet than actual money, and it's mathematically impossible to get rid of the debt. You have to keep on borrowing. I won't go into the mechanics today because it'll take probably another 15 minutes to explain. But just Google it, put a pin in it for future research, or just take my word for it. It starts like this, and eventually it ends like this, right? So here's a little Excel spreadsheet I did on another live session a while back. And I never got around to completing it. But the point I was trying to make here is that this is just the US dollar. And basically, over the last 20 years, the compound annual growth rate has been about 7%. So that actually correlates with global, this one over here. I said 6-7% as average. And yeah, so that's the global monetary supply, and the US monetary supply, pretty much the same. So 7% CAGR. Global stocks has about 5.24% compound annual growth rate. Gold is about 9.93, higher than I thought because gold hasn't really done much. Not over the last 10 years. Over the last 20 years, it's been, if you looked at gold over the last 10 years, the CAGR has been like 3%. But then Bitcoin comes out of nowhere, grows 5.2 million %, the fastest growing asset in human history, and has a CAGR of 200%. It's freaking nuts. Now, the thing I want to do today, I'm not going to continue on this thread here, but I want to show you, I want to do a little bit of maths with you. So let's look at 2021 to, 2030. Let's do 2030. So let's just copy and paste this down here. So now this is where my Googling failed in 10 minutes because I couldn't find an actual number of global M2. Every time I looked for global M2, it just gave me a percentage. I didn't want a percentage for this thing. It was really hard. And no one, it's all about percentage. In fact, just look at the percentages in the last 12 months. So it was Argentina grew its currency supply by 61%. Guess what? Next year, I promise you, this will be over 100%. The year after that, it'll then be 200%. This is how physics, I guess it's the physics of money. Azerbaijan, 20%. Like most countries are like just inflating their currency supply. The Congo, 50%, 35%. And it's just insane. Are there any crazy ones here? Ooh, what's this crazy one? Venezuela, 1,300%. Okay, here's another promise. This will be over 3,000% next year. Every year, when you get into this hockey stick phase, basically every year it doubles. So what I was going to do for this little example here is ignore the world. Let's just look at US M2. So if we just put in US M2 and in terms of actual dollars, so we can actually have some sort of yardstick. So US M2 right now is $19.9 trillion. So let's just put 19.9. And let's just be really conservative, okay? Let's just say the US doesn't follow Argentina. It doesn't follow this trajectory. And let's say it just appreciates at 15% per year. Something, really, really mundane. It's not going to... Now, I mean, seeing as last year is 25% and this year is 25%, it's going to be a lot higher. But let's just say it's 15%, right? Let's just keep it easy. So this is where I expose how bad I am at Excel. So equals B, equals A15 times 1.15, so 15%. There we go. And can I just spread this across here? There we go. Boom, boom, boom. And this is just growing at a constant 15%. And I promise you it will be higher. I mean, this year's already 25%, but I'm just going to under-egg this example as much as I can. Right. So at the moment, we're 19.9 trillion US currency supply. Let's look at Bitcoin's as a market cap. So right now, obviously it's dipped. Let's go to coin market cap. It was about $1 trillion. It's now 757. Yeah. 750. So when it was $1 trillion, let's just for easier maths. No, let's just do this. Let's try and keep it fair. 750. So Bitcoin right now is 757 billion. Right. So as a percentage, oh God, this is going to be horrendous. So just bear with me for a second. So calculator, 0.757, divide that by 19.9 times 100. Okay. There we go. So as a percentage, with a snapshot right now, Bitcoin is roughly 3.8%. So Bitcoin's market cap is roughly 3.8% of US M2, right? Now, over time, I think Bitcoin's market cap is going to, I think it's going to increase because when you look at Bitcoin's market cap, the rate that it's getting capital, as in the market cap, is growing at an exponential rate. So if we just look at this quickly over here, total market, let's just look at Bitcoin. No, it doesn't show you Bitcoin. No. Let's just look at this one then. I'm just trying to find market cap only. Here we go. There. So if you look at the market cap, so the amount of money coming into the Bitcoin ecosystem, it's growing exponentially. Yeah, we've had a bit of a tumble. It was at $1 trillion the other day, literally the other day, but it's growing exponentially. So I personally believe, I think it's highly likely to say that the percentage of Bitcoin's market cap will actually increase against USM2. Okay. I mean, it could be at some point 10% of USM2, could be 20%. But let's just be conservative. Let's just assume it stays. In fact, let's say it goes down. I want to be as pessimistic as possible. I don't want to be accused of being an absolute idiot cheerleader, fudging the numbers. So let's say it goes down. Let's say it goes down to 3%. So let's just use 3% as a yardstick. So what this means is that by 2030, and we've really underplayed this, USM2 should be about $80.5 trillion. Well, what's 3% of 80.5 trillion? So 80.5 times 0.03, it gives us a $2.41 trillion market cap. 2.41. Let's double check that. 2.41. Okay, yeah. So at 3%, it gives us $2.41 trillion. Let's just do 6%. So it's going to double that. So call it 4.8. I'll get to the punchline in a minute, folks. And let's just do 10%. Because I think it's going to be at least 10%, in my opinion. 10% of that is going to be, call it 8 trillion. Right. So, and I've massively under-egged this, by the way. So then you can just work it out. So worst case scenario, Bitcoin actually falls in terms of percentage of market cap against USM2. Don't forget the whole world is inflating at the same time, and we're just focusing on just the US here. So this is a ridiculous example. I just want to show you how even being ridiculous, Bitcoin still goes up. So then we can just do the maths. So remember, it's more patient Kryptonians. That's the equation. So if I want to work out the price, it's market cap divided by circulating supply by 2030. So in this case, the equation is market cap will be 2.41 trillion. Oh my God. 241 billion, 2.41 trillion. No, that's 2.4. Well, 1 second, I'm getting confused. That's 2.4 billion, 24 billion, 241 billion, 2.41 trillion. There we go. Then divide that by the circulating supply. By 2030, it's probably going to be about 20 million coins. There's 900 coins per day in issuance, so 20 million. There we go. So 120,000. So absolute worst case scenario in 10 years, Bitcoin hits 120 K per Bitcoin. I don't see this happening at all. I think it's going to be way, way higher. So even with the worst possible calculations ever, Bitcoin still goes up. So a little dip like this, you just got to buy the dip. Now, here's what I genuinely think. Remember, we've just done this on US M2, when in fact, Bitcoin is not a US toy, it's a global toy. And I think it's going to be something like this. So global wealth. No, in fact, let's try and do something better. Global money supply 2021. Come on. Trying to keep it. Don't give me a percentage, damn it. Oh man, how many? Okay, maybe if I just do global wealth 2021. Credit Suisse, they always do these reports. Global, okay. I don't want to download a PDF. Here we go. Something like this. Almost $400 trillion global wealth, end of 2019. Okay, let's call it 400 trillion. Okay, so here's what I actually think. So, by the way, global wealth goes up pretty fast as well. I'm hoping there's a chart in this, and you can see the cadence of this. Let's just open this up. Global wealth, give me a chart. I just want to see a pretty picture. No. Come on, global. No. I'll know it in a second if I see it. Is it this one? Global notes per adult. Oh, come on, Credit Suisse. Do me a solid. Relative change. No. Damn it. Prior preparation prevents piss poor performance. Here we go. No. Anyway, all these are going up. All these wealth charts are going up. That's per adult. I want total. No one give me a freaking total figure here. No. Okay, anyway. So let's be pessimistic again. So global wealth right now is 400 trillion. Let's just say it stays the same for the next 10 years. I can't see that happening. I only see it going up. Don't forget, we've got at least 7 technologies which are about to hit exponential growth, just like the internet did in the 1990s. So I think this is going to grow considerably. So let's just say by 2030, it's 800 trillion global wealth. Well, I see Bitcoin being, the global digital gold. It's basically taking gold's place as store of wealth, etc., etc. And so I see Bitcoin sitting at 10% of global wealth in terms of market cap. So that puts Bitcoin at an $80 trillion market cap. So let's do this equation again. So if Bitcoin had an $80 trillion market cap by 2030, we can just do the same calculation. So oh my God, here we go. 800 trillion. How many zeros is that? So 80 billion, 800 billion, 8 trillion, 80 trillion. Divide that by 20 million. 20 million. That gives Bitcoin a $4 million price. So again, I'm being massively pessimistic here. It still puts Bitcoin at $4 million a coin by 2030. I think it's going to be much higher. So this is why every single text message, WhatsApp, Facebook message I'm getting going, oh my God, should I sell? like my brain melts because I'm looking at the bigger picture always. So it's just like saying, in fact, so the way my brain looks at this is, hey, Simon, would you like to buy this thing for $40,000 right now? And there is a high probability, or there is a probability, whether it's high or low, but there's still a probability that this $40,000 thing could turn into $5 million, $4 million, whatever. Well, wouldn't you? Wouldn't you pile your life savings or as much risk capital as you can, at least, so that your $50,000 or $40,000 thing right now could basically, what is that, 100x, 1000x, whatever it is. Yeah. So that is Bitcoin, crypto as a whole is everyone's opportunity to leapfrog your own personal net worth growth curve by multiple years. Put it this way, my whole Kryptonian portfolio, even though I lost $130K yesterday, it's grown 700%, still 700% up since January the 12th, when I reactivated my Kryptonian portfolio. To put it this way, what is 700% in normal investing growth? So an average good investor makes 10% per year. Well, 700% is 70 years worth of profit. So even if I was to sell out right now, I've still made 70 years worth of profit. So maintain bigger picture, folks. So that's my little shoddy spreadsheet example, and I've massively under-egged this. I personally see, by 2030, Bitcoin being about $10 million per coin. And especially when you look at stock to flow. So if we just go to stock to flow, and stock to flow is the only real thing that has been accurate over the last, all of Bitcoin's life, pretty much. So by 2028, in fact, by 2026, in the next bull cycle, we're seeing Bitcoin at $1 million. The baseline is $1 million, and we always overshoot the baseline. So the next one, remember, because this is a logarithmic play, we have to add another zero. You add another zero. So the next, I'm going to try and annotate the chart here. If I can get my little pen out, does this work? Here we go. So the next growth curve looks like this. And because it's a log chart, it's 10 million.
Yeah, I know. I'll be here for about half an hour anyway.
I'm just going to mute everyone because whoever's, just for a moment. So if you really want to play the long-term game, you basically get as much crypto now, and it's like the best lottery ticket you could hope for, because it's a lottery ticket with real probabilities on your side that one Bitcoin now could be worth $10 million by by 2030, basically. That's the real sort of long, it's still a medium term play. If you want to be a bit more short horizoned, you can look at the 2025 bull market to hitting $1 million. So this is why I'm bullish. And as a trade, and bear in mind, everything I do stems from trading. I have a trader mentality because I've been trading 16 years, and I look at everything, literally everything, in the form of our risk to reward ratios and R multiples. So if we just get rid of my annotations, clear all drawings, there we go. So as a trader, I'm obsessed with asymmetric trades. And an asymmetric trade is basically minimal risk, high probability. So the risk is, okay, worst case scenario, I lose 100% of my portfolio. Okay, that's my risk. What's the upside? Well, let's work it out. I can show you. Let's say by 2030, it's $10 million a coin. Let's say I've got one Bitcoin. So I could lose all of that one Bitcoin, or I can make $10 million. So divide that by $40,000 right now, times 100. I think my math's probably incorrect. 25,000%. So who wouldn't take that trade? Who wouldn't at least have a punt on that trade? People play the national lottery, and it's like you're more likely to be hit by lightning 7 times in a row than win the national lottery. People do premium bonds and think that premium bonds are great, but you have even worse odds with premium bonds. It's like 1 in billions to win the jackpot. So this is the best asymmetric trade in our lifetimes, or in probably in our generation. There's always a trade like this in every generation. And we're just lucky that we are adults with some money, even if you have £1,000 that you could put into this. So this is another reason why I'm still really bullish. So that's the asymmetric trade thing. Now, in terms of what happened, because I've paid zero attention to this crash and FUD, I literally haven't looked into it. But looking at my group, someone posted a picture. Yeah, I haven't looked into this, but it makes sense because you see futures issues all the time. You saw it with oil last year when oil went to minus $37 a barrel. So whoever DCT crypto trading said, there's a buy-side liquidity crisis on futures for both alt and Bitcoin. There are so many liquidations that there are no buyers left to absorb these liquidations, a bit like oil last year, which results in flash crashes and extreme backwardation between spot and perp. And the next one is, someone said capitulation. And this is the best reply because this is exactly what I would have said. Capitulation is when people sell the bottom out of fear. This was forced selling because of liquidations, pretty much the same that happened to Bitcoin in March, etc. So yeah, that's probably the real reason. And however, the media pointed the gun at China, but China is always saying it's going to ban it. So yeah, whatever. Now let's have a look at the chart here because I have made I've made an error and I haven't made an error. So this is where fundamental analysis. Oh, go away! I thought I deleted all of these alerts. Clear log. I did. Okay. So hindsight is great, obviously, and as a trader and investor, you will always be balancing that seesaw between fundamental analysis and technical analysis. So for the newbies here, technical analysis is the study of the charts. Basically, trade the chart, not your heart. And fundamental analysis is understanding what makes things go up and down. That's basically it. The underlying reasons of why shit happens. Now, I have always said for many, many years that if you are a technical trader and you're placing trades that are less than 6 months, do not touch fundamental analysis at all because it takes time for sound fundamental analysis or sound fundamental reasons to filter into the market price. So yeah. However, if you're investing, you absolutely need fundamental analysis. So if you were to invest in Tesla, for example, you wouldn't be investing in it because of the chart, because the chart looks like dog shit at the moment. You're doing it because of the fundamental reasons, because it's not a car company, it's a tech company. Or actually, it's an AI company and it's an AI energy utility company. That's basically what Tesla is. And it happens to have cars, which will be doing the SAV industry, the shared autonomous vehicle industry. So yeah, you'll be going into Tesla because of fundamentals, not because of the chart. In fact, looking at the chart, it's broken its base trend line, so it's actually very bearish. Again, for FCA purposes, I'm not recommending to buy or sell crypto, and I'm not trying to influence you to do anything, just in case there are any snowflake pansies here that want to report me. I'm not saying buy or sell. I'm completely neutral. I'm shutting my mouth. Tesla is a regulated asset. I can't say shit about it. However, I could say whatever I want about cryptos because it's an unregulated asset. Go crypto. Woohoo. I wonder how long that will last for. Probably 5 years until the FCA tries and screws everyone over. So what was I trying to say? Asymmetric trades. Oh, man. Oh, yeah. Fundamental analysis and yeah. So hindsight here. Let's get back to hindsight. I saw this a few days ago. I think it was one of my live sessions. And I said, this is a classic topping pattern. I mean, just look at it. This is a topping pattern. You could call this a double top here or a really shit head and shoulders. But either way, it's a topping pattern. And that, yeah, what's happened here is textbook. So if you look at the distance from, say, the neckline to the peak, so I know, let's say that's what, 65 to 47 are public maths. I'm really bad. 65 minus 47 equals 18. Okay, so $18,000. What you can then say is, okay, well, the market's likely to drop $18,000. So what's $18,000 minus 47? So 47 minus $18,000 gives us 29. Okay, so 29, oh, not far off. So if you were to look at Bitcoin from a technical play, oh, I can't draw a straight line. Just looking at this topping pattern here, you'd say that, okay, yeah, it'll probably drop to 30,000 and then bounce, or 29,000 and bounce. And guess what it did? It dropped. Now, I'm not saying that this is the end. This very easily could filter back down here. Now, the worst case, looking from a technical perspective for Bitcoin, is if we have a retest of this low. If we have a retest of this low, it's going to be an absolute slaughterhouse. Why? Because it then creates a far bigger head and shoulders. So what I mean by this, let's just clear this chart up a bit. Now, I'm not saying this will happen. I personally don't think this is going to happen. Let's just get rid of some of these lines. So if, let's get my pen out so it's a bit more accurate. If we have the market dropping back down to these levels, it could create a far bigger head and shoulders. So shoulder, head, shoulder. It looks like cock and balls. Let's call this the cock and balls pattern. If that happens, we could see further falling. But I think there's probably a 10% chance that will happen. I'm 90% confident that we're going to see a bounce from this, just like we saw in other things. Remember, going back to all of those reasons I mentioned, you know, is all of this still happening? Yes. So, you know, yeah, I can't see that happening, but that's worst case, the cock and balls worst case scenario. It's not really much of a cock, that's more of a stub, but hey ho, let's move on. And if anyone's offended by my language, I'm probably not the right person to follow. I'm sure there's plenty others on YouTube. So that's that. Yeah, so I guess in hindsight, I should have traded the chart, not my heart. But then I'm in crypto for the fundamental reasons. I'm not really trading it. The only things that I'm trading with crypto are just my little side steps. But ultimately, I'm hodling. Yesterday, I bought the dip. I'm planning on borrowing the dip now once I find a good platform. But yeah, so that's that. And also, don't forget this. What's just happened here is absolutely great. This is actually a double bubble here, because one, it's given us a great buying opportunity. And for people on the sidelines, it's been an epic buying opportunity to get in. And two, time is our friend. What this now means is that Bitcoin will actually grow higher. So I'll show you why. So if we look at the logarithmic regression curve, so let's get this onto a logarithmic thing. Let's get the logarithm. It's this one here. Right, I'm just going to mute people making background noise. Okay, here we go. So here is the logarithmic regression curve for Bitcoin. And let's put it on a weekly chart so it's a bit clearer. So these little vertical lines are the halvings, and we tend to see a peak roughly a year or two after the halving. But the way things go with exponential models in the real world is that they don't maintain an exponential growth. So a proper exponential growth curve on a logarithmic chart is a diagonal line from bottom left to top right. But in the real world, we don't live in an exponential world. We live in a finite world. And so exponential things peter off. And this is what's happening here. And so what you'll see is that the from halving to peak, it will elongate. And so the first peak was it 52 weeks, then it was 73 weeks. And so I think if I was a betting man, which I guess in some way I'd say, oh, would you look at that? There we go. I'd say the next peak, is probably again going to be in December, January time, and that coincides with the stock to flow model. I've lost the tab, but yeah, that coincides with the stock to flow model. Now, the reason I say time is our friend is because if we shot up, let's say we didn't have this correction, and we just shot up straight into this red zone, it would have caused all sorts of hell. And it would have, I mean, if you just look at let's just say it's the lower band that is going to bounce off. I mean, most of the time it gets right into the red before it bounces, but let's just say it bounces off the bottom band. Well, if it just went straight up into this band here, we would have seen Bitcoin basically entering a consolidation phase at around $77,000, which, is all right, double that from what we are now, but almost. So, but now we've had this dip, which is great because it's just basically extended the time that it will take to get to this high. So let's just say, we get to a peak within 73 weeks, like the previous market. Well, if we extend that bar, we're then looking at $100,000 Bitcoin. But as we know, January is when we're expecting December, January time is when we're expecting the peak. Then we're looking at sort of $125,000 Bitcoin. So we now have it's basically pushed back the yardstick a bit. And I said this before, we really don't want to be getting into the red phase in summer. That's not good for Bitcoin. You don't want a sharp, quick rally. You want a slightly extended one. And so all I see that's happening, because then you'll see what happened in the 2013 bull market. Here, you had a very fast expansion into the red, and it just bounced off that. And it went from sort of $257, smashed down to $50. I remember that. Although I wasn't big in crypto, I was a big crypto hater back in 2012, but I was around the market space. I was too obsessed with silver back then. I put all my money in silver instead of Bitcoin. What an idiot. So, and then we had sort of a double peak. That's what happened in 2013. And although, so I guess, so this little double peak here actually extended the time, which was good. Again, look at the growth curve. So I think what's happening here, although we didn't spike up into the red, I think this is going to be a bit of a double curve, a double peak. And so we're going to see sort of I think probably $150,000 this time around by December. And then when you look at the Willy Woo moving average chart, this is the one chart I like from him. This one's pretty much called the bottoms. So if we look at this, if I zoom in a bit, this purple line is basically called the bottom. So every time we've had a low, it's hit this purple line. And so another reason why time is our friend, if we zoom in a bit, time is our friend because this bottom line is increasing. So at the moment, the base line is basically $10,000. But if we zoom out, you can see that every single peak has also been hit. So this peak, boom, on this green dotted line, another peak, boom, another peak, boom. And so where is the peak right now? So if we were to really zoom in, right now it's sat at $144,000. Where is it likely to be by December time? Well, holy shit. This could be, but December time is up here. So if it continues with this cadence, this line is actually indicating an excess of $200,000 Bitcoin, which, it's interesting. That's all I'm going to say. It's just interesting. So time is our friend. Right, let's go through. I'm just going to exit out these tabs just to make sure I haven't missed anything. No. Argentina, broad money. Okay, no data. Doesn't help us. That's Argentina. Oh, I just clicked out of the live session on YouTube. Here we go. Right. Okie dokie. I think that's all the tabs out of the way. Let's just exit that whole tab there. And I'm going to start going through the comments now. Right. Oh, wow. There's quite a fair few of you here. 75 on Zoom and 91 on YouTube. Hey, everyone. I thought I was talking to like 20 people. It's my lucky unicorn shirt. So I wish it's actually Bitcoin and crypto. That's all people care about these days. Right, let's look at Zoom. Oh my Lord, loads of questions. Hopefully what I've just blasted through has helped. I've been talking for about 50 minutes. Pink really brings the color of my eyes out. Oh, cheers, Aaron. Right. Any questions? Rachel, basically happened because a rich guy wanted to buy in low. Yeah. Here we go. Rachel's given us a chart or a picture. Oh, yeah. That's basically what I've shown you. There's massive pullbacks along every bull market. Yeah, exactly. Bitcoin. Mike said in 2017 Bitcoin was the thought of a future currency. Then it crashed. In 2021, it was talked about more of a good store of wealth like gold. Now it's dropped so much, people will think, well, will people still think that way? Won't this send people back to gold and silver? No, I don't think so. You're right. Bitcoin has gone through an evolution of perceived formats. So yeah, originally a lot of people thought, oh, it's going to be the world digital currency. And obviously it's not that. I mean, with an average of 4 TPS or 4 transactions per second, it's not going to do that. It is, in my opinion, it really is the store of wealth. That is it. It is the bank for cyberspace. It is a bank that is foreign to everyone and it's permissionless and censorship resistant. It is something where you can store your wealth where no one can go in and grab your Bitcoin from your own wallet. That's what it is. And so when you look at a bank, whether Bitcoin has $1 trillion AUM, so market cap, or 10 trillion or 100 trillion, it doesn't mean it's overvalued. It's just like a bank that goes from $100 million in assets under management to $1 billion. Doesn't mean that bank is overvalued. Just means they're looking after more money. And so that's where I see Bitcoin. It's the bank for cyberspace. So that's why I really see Bitcoin market cap being $100 trillion in the future, like within 15 years or so. Because you have to understand it's network effect. That is the real intrinsic value of crypto. It's network effect, and it's growing exponentially. So Rachel, I love the nonchalance is the secret investing superpower quote. It really is. It really is. Tom, hi everyone. I'm a bit traumatized. Still bought the dip. Maybe just a sucker for punishment. Even if you are, you're gonna be good as long as you hodl. And Matt, just look at all the people. Oh, bugger! I've just clicked off YouTube again. Sorry, I'll come back to the YouTube. Oh, there we go. Sharing the screen. Sorry, not sorry if I'm talking too fast. Yeah, if we go back in time. And as I said this, I think the other day, imagine you're the world's worst Bitcoin investor, the world's worst. And you are pound cost averaging in over time. Let's get rid of all these. And every single month you bought at literally the worst time. You bought, this high, this high, this high, this high, this high, this high, right at the top at 19.6, that high, that high. Like if you bought in at all of those peaks, and you didn't do anything, you didn't capitulate, and you just hodled, well, right now you'd still be way in the money. So just maintain the bigger picture. Seriously, folks. Just like everyone was talking, Amazon's a great example. So if you look at Amazon back in the 90s, everyone thought this is just a shitty little company that sells books online. No one's going to buy books online. It had its, Bitcoin 2017 bull market type thing where it ran up crazily and it lost 95% of its market share or share price. It was horrendous. There was blood in the streets for Amazon and Apple and Microsoft in 2001, 2002. And you would have thought, people said, oh, you're an idiot for doing that. And that's pretty similar to what Bitcoin did 2017, then 2018. And then again, there's a form of network effect. Why is Amazon so good? Yes, you can get stuff delivered, within a day. But the reason Amazon has real value is network effect. It's because so many people use it. It has value. That means it can do more things because it has economies of scale. And then all of a sudden, Amazon does buy again, even over here, $400 back down to $290. See ya. And if we really zoom out, This is where we are right now with Amazon. So I would go as far as saying, if we go to the weekly chart, the chart of Amazon is going to be pretty much exactly what the chart of Bitcoin will look like over the next 20 years. I'll put money on that. In fact, I am. I'm putting 6 figures of my own personal money, and my business money, in crypto. That is my bet. That is me putting my mouth where my money is. Money where my mouth is. That is what the Bitcoin price chart will look like over time. I've never been more certain about anything on the markets. So that's that. Let's get rid of the share. Let's go back to the. So there's too many comments to read everyone out. I'm just going to look for any particular questions. Tom, and the more money they print, the less effect on the economy, diminishing effect, just like drugs. I agree. Yep. Like adrenaline. That's why adrenaline junkies just do crazier and crazier things. I used to be, I had to wean myself off adrenaline when I was younger, to the point where skydiving was boring. I then did bungee jumping. I found bungee jumping boring. I then did no, I won't tell. That's just too reckless. But then I got into SCAD jumping. Has anyone heard of SCAD jumping? It stands for suspended cable air device jumping. So what happens is you run off a cliff with nothing on and you fall into a net. That's what SCAD jumping is, and it's scary as hell. Cliff, I see you. Yeah. Another form of SCAD jumping is that you go into like a big crane, and you stand in a little box, and then the floor basically gives way, and then you just drop into a net. But yeah, if you've never done SCAD jumping, it's amazing, especially running full pelt off a cliff and free falling into a big spongy net. It's really fun. But then I started doing silly stuff. So I had to wean myself off adrenaline. Yeah, I was probably a safety hazard because I was also flying planes in the military back then. Not a good combination. Fiat is the biggest shitcoin. Yeah, of course it is. So if you were to apply crypto tokenomics to the world's fiat currencies, the dollar, the pound, the rupee, whatever, they're shit. What's the max supply? Or it's open-ended. Okay, what's the distribution curve? Well, it's open-ended. It's got one node, which is the government. It can do whatever it wants, and it can print whatever it wants. It's the worst. It's got the worst tokenomics. So that's one good thing about crypto. It's actually educated a lot of the smaller people to the point where a lot of small crypto investors, doesn't matter how much money you have, a lot of crypto investors, if you've been in the space for a few years, you'll know a lot about tokenomics. And you will be able to battle any economist on certain topics. In fact, the average crypto investor that's been around for a while, that knows a little bit about tokenomics, will know more about crypto and tokenomics than economists. God, Simon, you need some extra hard drive for all those shortcuts, lol. What shortcuts? I can't remember what I was talking about there. Okay, Alex, question. What's your take on Virgin coins? Virgin coins are Bitcoin that has proof of origin, aka where it was mined, and was it mined using sustainable energy resources? Kevin O'Leary has been teamed up with a few. I don't know. I don't care. I haven't looked at it. Every single day there's a new proof. There's proof of authenticity, proof of history, proof of ownership, proof of there's all sorts of new ways of doing crypto. And I'm not a crypto dog. I don't go chasing the news, and I don't care. Every day, there is a new crypto upstart that is better than Bitcoin, better than Ethereum, better than blah, blah, blah. But it doesn't matter. What's their network effect? Zero. If you have a fax machine and one person has a fax machine, what's the network effect? Zero. You can't talk to anyone. If 2 people have a fax machine, all of a sudden you can talk to each other. You got some fledgling amount of network effect. You now have 1 million people that have a fax machine. All of a sudden, network effect is exponentially bigger. And therefore, the fax network is worth something. That's what crypto is. So if an upstart comes around tomorrow with a brand new tech, it's effectively worthless because it has no network effect. So yeah. Okay, Rachel, M2 money supply. Yeah, I came across this, but I wanted a total figure. You know, what is the global M2 money supply? Like, is it what, $200 trillion or whatever? That's what I was looking for, not a big list of everyone. But yeah, thank you anyway. So you can't see what I just saw. I was just clicking a link. Tom, every time I say a trillion, I sound like the devil. Right. Steve says, you're 100% right about exposure. I jumped into the shitcoin market and my learning curve was incredible. Taking your advice and applying it to real-time situations is invaluable. I got to see so many bad cryptos that it really makes me appreciate the good ones. Yeah. If you look at my portfolio, I've got 50% of my portfolio in solid plays like Ether, Cardano, Polkadot, Chainlink, Solana, stuff like that. 50%. Filecoin, Theta, all those sorts of things, and then 50% in Smart Tracker, where I literally own everything. So if we do my share screen, get Trading View up again. So this watch list over here on the right hand side, that's every crypto I own. I basically own the market, so I don't care which crypto goes up or down because I've got it. So. In fact, I don't need all those stats. Let's bring it down. Yeah. So everything here, this is what I really don't care what does well, what doesn't. I just own the market. And some coins I actually own, I don't actually like. So, I've got like $5,000 worth of Ripple. I don't particularly like it, but it has a cult-like following. So screw it, I'll buy it. I don't like Kishu Inu. It's a shit dog coin. However, I turned $370 into 10K the other day. So I'm just following the hype. So a lot of the time I'm following hype. And to be honest, there's a lot of coins here. I don't even know what they do. It doesn't matter because it's Smart Tracker. You're just buying the best coins in every sector and you're going to do well. And so, yeah, we're on a bit of a bounce back day here, but don't let that fool you. We could still have a move down. So Nano, 48% up today. Nice. ICP, yeah, okay, fair enough. What was I saying? What was the next? Oh yeah, let's get out of this share. Let's look at the chat box again. Where is it? Okay, here we go. Sorry, I'm just trying to find the. Considering everything is going towards a cashless society, this is pretty much a guarantee. Yep, I agree. And the more this grows, the more options will be available for general crypto purchases. Yeah, like there's still a massive, massive issue with crypto. Like the fact that we all think that we're in a decentralized currency or forms of currency, yada, 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 and we're getting out of the system. But the thing is, there is still a permissioned onboarding ramp. So what I mean by a permissioned onboarding ramp is that it's pretty much impossible to get into crypto without sharing your inside leg measurement. So you're putting fiat into Coinbase, Kraken, Binance, whatever. What do you have to do? KYC. You've given these permissioned entities your details. There's still nothing stopping governments from forcing Coinbase to hand over all of their data to the government so they know who owns crypto. Like that probably will happen. So one thing that needs to happen with crypto, and it's an inevitability, it will happen. There will be a permissionless onboarding ramps. That's what we need. We need a way to get into crypto completely anonymously, where we don't need to hand over freaking, like I had to put my passport and driving license up to a thing the other day, and then I had to like draw something like my name is Siam and a special number on here. You take those cheesy screenshots when you're, here we go. Oh yeah, it's Gate.io. I had to basically try and extract my SafeMoon because I couldn't get it off Binance. I had to like do a little screenshot. But so I'm waiting for permissionless onboarding ramps. That's what we need. And then when we have that, you'll see even more uptake, a network effect getting to the point where it's too big to fail. Tom, assuming Bitcoin reaches £1 million or dollars in 2030, what I don't understand is what the true value of this is when this would be during a time that hyperinflation is happening. Yeah, agreed. So when you look at so inflation adjusted returns, it will probably be a bit less, but it's like the saying, one Doge is worth one Doge. One Bitcoin is worth one Bitcoin. You'll see the purchasing power of Bitcoin go up exponentially against the dollar, simply because the supply distribution. There will only ever be, in fact, in our lifetime, we won't see more than 20 million Bitcoin circulation. Remember, the last Bitcoin is mined in the year 2140. 90% of all Bitcoin in existence is out there right now. So, but yeah, Bitcoin will just buy you more stuff. This is why I don't want to sell anything. This is why billionaires don't give a shit about corporate capital gains tax. Why? Because they don't sell anything. They never sell. They finance off of their assets if they want capital. So if they want a quick million or 10 million, whatever, they'll borrow off of their asset. So they can borrow off their asset at minimal rates, 1%, 5%, whatever it is, but they maintain their asset. So they get the PAG, the potential appreciation growth. I've met a lot of yeah. So I went to a school called Gresham's in Holt in Norfolk, which was full of spoiled, entitled brats, literally. Like, for example, there was a brat that rocked up to school on his 18th birthday with a Ferrari. His daddy bought him a Ferrari for his 18th birthday, which he wrote off 2 weeks later, by the way. So I went to that sort of school where it was just full of entitled brats. Now, it's because it's Norfolk, a lot of the big wealthy families there were land wealth. So basically, everyone was a farmer. Like the wealthiest kids at school were from farming backgrounds, and so and where did their wealth come from? It's because their great granddaddy set up a farm and now happens to own 5,000 acres of land in Norfolk or whatever. Like, had that person gone, oh yeah, I'm going to sell out, I'm going to snatch profits, like, they wouldn't have created generational wealth. And that's where long-term wealth comes from. It's where people buy stuff and don't sell it. I met someone the other day who's a pretty wealthy person in Norwich. So he's not a billionaire, but he's worth probably 60 million. And I was like, so where do you get your wealth, mate? And he was like, awkward, I didn't get it. My granddad did. I was like, okay, what did your granddad do? And he was like, well, he just bought a whole street in Norwich like 100 years ago, or great granddad or something like that. And so this family owns a whole street in Norwich, which has hundreds of houses, lots of commercial properties, etc. And what did that family do? They just hodled. If they ever needed cash, they just remortgage parts of it. So Bitcoin is that next thing. Like, be the person where they go, what did your granddad do? Or what did your dad do in 2020? Oh, he bought one Bitcoin and sat on it forever. So it's like that meme that's going around. I was like, what did you do, granddad? I bought a Bitcoin. Legend. So be that person. Steve said the biggest lesson has been stop trying to convince others. Yes, just don't bother. Just don't bother. Jump in myself and let others know. If they want to follow you, point them to you. Otherwise, I'll just keep quiet. Yeah, and being quiet is the best form of security. I'm absolutely screwed on that fact. Rachel, when do you think the 50% correction will happen? Well, we just had one. I don't know when the next one will be, but I'm expecting it. And then I'll just do exactly what I did right now. But yesterday, do nothing. Go and play golf. Vasilios, I'm so sorry if I said your name wrong. Thanks. Seriously, this stuff should be charged massively, especially looking at these charlatans out there. One question I have, thank you, by the way. One question I have is you usually talk about seesaws and that ETH was better to buy the previous months in that context. What happened yesterday? Is it like a trigger for buying Bitcoin? No. Share screen. Here we go. So I do seesaws, right? So I play things against other things. So if we go to my YouTube channel, my videos. In fact, actually, I can see the playlist here. in my playlist, I have a playlist called Free Crypto Basics. Basically, everything I talk about on YouTube goes into this playlist, including this one. And then here we go. So this was in January the 7th, and it says the main reason why I'm in Ether and not in Bitcoin. And it's because I was looking at this ratio against, so where was it? I want to get it up. Come on. My big old fat face is in the chart. I should have spent a bit more time in. 1 second. Here we go. No. Come on. Sorry. This is worth the wait. I promise you. No. Come on. Yeah, here we go. That'll do. That'll do, pig. So this is looking at Ether against Bitcoin. And back then, Ether was at 0.03. So remember, it's a ratio. And I was saying that this is a bit of a compression, and we're going to see a massive explosion of Ether against Bitcoin. And that I drew the arrow up to 0.08, but then later on I drew it up to 0.1. Well, what's happened with Ether against Bitcoin is Ether Bitcoin. That's those same squiggles are still there. Look at what's happened. Ether did exactly that. It shot up to 0.08, and I still think it's going to get up to 0.1. So what this means is that, like, if you bought Ether down here, right now you'd have shitloads more Bitcoin than had you just bought Bitcoin. That's why I never buy Bitcoin. These days, it's the slowest moving crypto because it's the biggest crypto. It's an oil tanker compared to a freaking Royal Navy frigate. There we go. There's another delivery at the door. Every freaking live session. Oh man, no, I'll ignore it. It is something I need, but hopefully they'll just leave it on the doorstep. And would you look at that? There's a lovely low test on the Ether Bitcoin chart. So right now, Ether is still undervalued against Bitcoin, in my opinion. It's got further to go. And I think this year we'll probably see the flippening. And the flippening is when the Ethereum market cap overtakes Bitcoin market cap. That's what I see happening maybe at the end of this year. If not this year, within 3 years for sure. That's what I see happening. And so if that does do that, we're going to see some fun times. So yeah, basically, so that's that. Let's have a look. Let's go back to stop the chart. Going back to, come on, there's so many comments here. I'm sorry if I'm missing some. Tom, what do you think of the price of Bitcoin will be during the next bear market of 2022 to 2024? Around about where we are now, mate. Yeah. So it will probably shoot up to 150 maybe, then shit back down to 100, maybe 80,000. But what happens is that the cadence is always up. It's always up. So yeah. Aaliyah, if you don't want to trade these cycles, what coins should one buy now and just hold? It's really tough. Just do the Kryptonian portfolio. Oh no, mind you, if you're not going to trade it, just go into solid ones. Bit of Bitcoin, bit of Polkadot, bit of Cardano, bit of Chainlink, bit of Kusama, maybe. Just, yeah. But ultimately, if you want real security and stuff, Bitcoin. That's what Bitcoin and Ether really. But they're not going to move as fast. Like Ether is now not going to move as fast as some of the others like AVAX or Kusama or Polkadot or Cardano, etc. Just go back to the basics. If you want Ether to double in price, you need to get another $330 billion going into Ether. And we were there, by the way. We were, because Ether was almost double this. Whereas if you want, I know, Solana to double, you just need another $11.8 billion. And that's like a penny in crypto speak. So, yeah. So that's that. Should Bitcoin hit, so Asif has said, should Bitcoin hit the estimations that you've put, $10 million per Bitcoin? and a lot of people becoming wealthy of crypto, what do you think would happen to the prices of things like houses, cars, and other high value items? Or the dollar prices or the pound prices will continue to go up. Remember, the currency supply is inflating, and so everything else will go up with it. So everything will just go up in prices as well. But Bitcoin will buy you more than a dollar will, obviously. Rob, speaking of trading, Simon, is there a way of setting up a crypto trade in the same way you do an FXM, entry buy, stop loss? Yes and no. You can do entry buys. You can't do entry sells. I'm talking about spot trading, by the way. So you can do entry buy orders, can't do entry sell orders because the market would just sell. Mind you, yeah, you can do entry. Sorry, I take that back. Yeah, you can do entry buys, entry sells. Not a stop loss though, because the market would then just sell. And don't margin trade. Please, 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 please don't margin trade. Don't margin trade. I'm going to say it one more time. Do not margin trade with crypto. You're going to get wrecked. I promise you. I've been trading 16 years and even I'm not margin trading. It's just, you're playing with fire. Rachel, selling at the bottom is silly to me. You've practically guaranteed your own loss. Yeah, true. Unless you're doing a bit of a tax dodge where you sell at a loss, you crystallize it. So you then can offset those crypto losses. You can then do a bit of financial engineering. You can then loan some money to a company or to your wife or whatever. That entity, whoever is just taken out of the loan, then puts the money back into crypto straight away at that level. So you end up with the same amount of coins. You personally have then written off a whole bunch of tax losses against your profit. So that's that. But you then still end up with the same coins, although via a different entity. But that entity will then still have a loan, which could be written off or just extended. It could be a 20-year loan, and 20 years time, you extend it again. That's basically what a trust is, really. So there are ways around it, but HMRC will be cracking on to stuff like that. At the moment, that sort of stuff is legal. Probably will turn illegal at some point, maybe. Who knows? Rachel, I think Toyota could be a good investment considering they've gone solid state with their batteries and their collab with Tesla. Something big is coming there, I think. Yeah, I think Tesla and Toyota is going to be doing the mass market car. So remember, Tesla wants to litter the world with robo-taxis. That's their sort of shared autonomous vehicle goal. And they don't have this, or not yet, they don't have the production capabilities of Toyota. So, I mean, Toyota will chuck out more cars in a week than Tesla will do in a year or something like that. The stat is crazy. And so it's a good collaboration. So what I see probably happening is that they'll make a mass market car, like a £15,000 Tesla Model 2, that will be built by Toyota because they can do that. But the electronics will all be Tesla. It will have full self-driving capabilities. The interior will be, all the electronics and wizardry and tech will be Tesla. And that's a way that Tesla can have billions of, robo-taxis. So, okay, just going through. Okay, Bijan has said, Aave is a lending platform, but I don't understand what happens if you don't pay back what you borrow. Do Aave debtors come knocking on your door? Noob question, I know. No, it's not a noob question at all. This is why I like crypto lending platforms, because what happens is this. There is no risk to the Aave platform, and there's no risk to you in terms of debt collectors and stuff, because your own crypto is there as collateral. So obviously you do it in crypto. So let's say this is the Aave platform, or like many other crypto lending platforms, there is you. Bijan is a bloke, I think. You're a bloke. So yeah, let's draw you as a bloke. So what happens is you go to Aave. Let's say this is an entity over here. Let's move this around. One sec. Sorry, my mind works in pictures and numbers. So I have to draw pictures. So you go and plop in I don't know, let's just say £10,000 worth of an asset. It could be Ether, Bitcoin, whatever. Let's just say you put Bitcoin in. And then Aave will give you the ability to borrow a percentage of your collateral. So you don't want to over egg it, because then you'll get liquidated pretty quickly. But let's say you borrow 50%. Okay. So they then give you, now you can choose to borrow in, like a stable coin or whatever. And there'll be different percentage rates depending on what you borrow. But let's say you then borrow 50% of, I know, DAI, like some sort of stable coin. And the cool thing with Aave is that there's no term. You can have this loan running forever if you wanted to, paying whatever APR, and it ranges. It depends on what you borrow, anywhere from 1% per year to 20% per year, depending on what you borrow. Now, the cool thing here is that if, let's say, the market, let's say you deposited Bitcoin and it drops in value, and it hits the liquidation level, well, that's fine. All that happens is Aave liquidates your loan by using your own collateral. So in this case, if you're borrowing 50% and Bitcoin shits itself, like, you're not really going to lose more than 50% of your Bitcoin, because it just uses your own Bitcoin as the collateral. It's not like a mortgage, like with a house, where you're really levering up. I mean, in a mortgage, so a mortgage is the worst financial instrument on the planet. Like, yeah, you can lose your shirt with a mortgage. In fact, we won't go into that. But yeah, that's how it works. And so what you can do, so this is why I'm trying to borrow the dip. When I say buy the dip and borrow the dip, so I bought the dip yesterday and I want to lever it up a bit. So there's me over here. I want to plop, just say $100,000 over in, I don't know, let's call it Bitcoin. I don't own any Bitcoin, but it doesn't matter. Into Aave or something. I'm not going to use Aave because the gas fees are just ridiculous. And then I know I'm going to borrow $50,000 worth of, DAI, the stable coin, something like that. And then what am I going to do with that $50,000 of DAI? Let's say I'm paying 5% per year. Well, okay, as long as I'm making, and I can keep this forever, this loan forever. So all I need to do, in fact, let's say it's even worse. Let's say it's 15%. Well, I now need to put that 50K into something that's going to grow faster than 15% per year. So even if I was really boring, I could put that $50,000 back into Bitcoin. Is it likely that Bitcoin's going to grow more than 15% per year? Hell freaking yeah. It's got a 200% CAGR over the last 10 years. So in that way, I've basically levered up 1.5 times. Because I put 100 grand in, but now I've effectively got 150 grand. So I guess that is a form of trading on margin. But the reason why borrowing the dip is the best thing to do is because if this is the chart, and let's say you do this and you borrow up here, there'll be a liquidation point. So let's say Bitcoin is at 60,000 up here. And because you've gone 50% LTV, loan to value, I know the liquidation point could be something like at 40,000. So if Bitcoin drops to $40,000, your loan gets liquidated. It uses your collateral to pay off the debt, and then you're sat there holding less Bitcoin or less money. So the way to go around it, this is what I do, is don't borrow during a surge. That's just silly. Wait for a big 30, 40, 50% correction, and then borrow the dip. Because what is the likelihood of this falling another 30, 40, 50%? Highly unlikely. So you're mitigating a lot of the risk by borrowing the dip, because then really it's just upside. So it's just a bit of risk mitigation. That's all I'm doing. That's why you borrow the dip, buy the dip, borrow the dip. Yeah. And here's an open call. If anyone fancies lending me £100,000 sterling, I'll pay you 10% per year, all day long. Because then it's just simple math. It's just a simple arbitrage for me. I borrow from someone and they pay, 100K comes over to me as a loan. I pay that person, 10% per year, interest only for 4 years. Let's say it's a 4-year term. Well, all I need to make sure is that I take this 100K from this loan and grow it faster than 10% per year. Well, hell, I could be really boring, just plonk that in Bitcoin and that'll do better. It's just simple maths. That's what wealth generation is. It's simply statistical arbitraging. That is it. Now, where debt, so this is, this is an example of good debt. An example of bad debt is I take your 100K and piss it up on boats and hoes. That will be bad debt. Good debt is where you take the money and grow it at a higher percent. Even if I took the money and grew it at 11%, there we go. That's still positive money making. That's what corporates do. That's what this is what I heard someone say. Wait a minute, Apple has literally billions of dollars of cash just sloshing around in its bank account, and yet they go out and borrow, like $1 billion with a corporate bond. They're like, why are they borrowing $1 billion? Well, because they're borrowing it at like 1%. And if it's on offer, if Apple can borrow $1 billion at 1%, why wouldn't you? Because they're not touching their cash reserves, and all they need to do is grow the money faster than 1%. You've got to be an idiot to not grow your money more than 1% these days. So, yeah. So that's that. Let's go into more questions. So yeah, not a noob question, mate. Whoever asked that, I think it was Bijan. I've lost all the comments. I haven't even got to the YouTube comments just yet. Martin said, are you still confident with the DOT Ether trade? DOT is currently underperforming Ether in the last week. Yeah, that's the last week. I look at things on a bigger perspective. So some of you may, or my traders know this, not the general public, but I sold all of my Ether last week. Or was it earlier this week? I can't remember. They all blur into the same thing. See, I see big things happening for DOT. And so I sold out because when you look at the DOT to Ether ratio, guess what? DOT is massively under-egged. It's undervalued compared to Ether. So I sold all my Ether, put it into DOT over here, and what will happen is DOT, when DOT does its thing, when it gets up to sort of 0.02, sorry, I'll then rebuy back the original Ether that I had, and guess what? I'll end up still with more Polkadot. Simple. It's just arbitrage. That's all trading is. That's what I'm doing with gas. I got a lot of gas. I bought in gas down here. Yeah, look at this. January the 12th. This is where I bought my gas. All the way down here. And when you zoom out, gas against Bitcoin is massively undervalued. So what am I doing? I'm just buying gas, and then I'll sell the gas way up here. Probably 0.04. Maybe if it could spike up if Neo gets its act in gear. But yeah, it's just a simple arbitrage. And what's happening on the gas to Bitcoin ratio? That's looking like a beautiful bullish rectangle. So the next move up is to 0.006. But let's just do the maths. For the newbies here, I'll give you a real example of a crypto arbitrage play. So let's say I'm right, and it just moves, with a bullish rectangle like this, the growth up you saw is the typical growth that you'll get. So let's just say it goes up to 0.05, okay? Now, let's just do the maths. I'll get rid of these words. So let's say let's say you're a bit more cautious and you're like, Simon, yeah, I see gas going up, but I don't see it going back up here. Okay, fine, whatever. So let's say you have a $10,000. No, let's keep it more realistic. You've got $1,000. Now you could put $1,000 into Bitcoin. So down here, oh man, this is where I'm gonna have to look at the Bitcoin on January the 12th. What was that? March. I can't remember. Sorry, Bitcoin. January the 12th. Where are you, Bitcoin? Is that candlestick there? Okay, so let's say Bitcoin is at $35,000. Let's just keep the math simple. So let's do the doodles over here. So £1,000. Back in January when I did this, let's say it's $35,000. So how much Bitcoin is $1,000 going to get you back over there? back then. So $1,000, divide that by $35,000 means you'll end up with 0.02857 Bitcoin. Okay. So you can either just put your £1,000 into Bitcoin back then and you'll end up with that much Bitcoin, or you buy gas back in January the 12th. So if you look at gas against the dollar, how much is that? It was $1.73, I remember off the top of my head. So you then go do this equate, you do it again. So in gas, you end up with $1,000. Divide that by $1.73, $1.73 gives you 578.034 gas. Okay, so we've got these numbers, right? So you either do either or. So me, I've gone down this route, I bought the gas. Now, let's say you're going to be very quick in this trade, very quick, and you're not playing the long game, and you're going to get out when the ratio hits 0.005. Okay, let's just do the maths. You exit at 0.005. Well, let's just do the maths. So you take your calculator, and even if you don't remember which way it is, you can just trial and error it. I always get confused. 578.034 divided by 0.005. Nope. So this is a good example of getting the thing wrong. You're not going to end up with 115,000 Bitcoin. So you need to times it. So you just start again. 578.034 times 0.005. Kaboom, baby. 2.89. So if I'm correct, £1,000. So, and by the time this happens, if it does get up here, the person that just put $1,000 into Bitcoin still has 0.02857 of Bitcoin. And let's say by the time that happens, I don't know, let's just say Bitcoin is, I don't know, $50,000. Okay, let's just keep it average. So by that point, $1,000. So you do 50. I'll do it over here. So $50,000 times 0.02857. That means your $1,000 has turned into $14,028. Okay, because really you basically got into Bitcoin from $30,000, went up to 50. You've made a little profit. However, over this point, you now, instead of having that, you've got 2.89 Bitcoin. So 2.89 times 50,000, 144K. Can you all see, so for the newbies here, can you all see why I love crypto ratio arbitrages? Because in this case, if is a big if I'm correct, and gas gets to 0.00. Oh, there's 3 zeros there. Shit, I've got that wrong, I think. Okay, it doesn't matter. Doesn't matter. I think it just means you got 14K instead of 144K. Let's just double check the math here. So it's 3 zeros. Sorry, I'm being an nincompoop here. So you do, what did I have? 578.034 times 0.30, then a 5. Yeah, there we go. 0.289. Here we go. So equals 0.289 of a Bitcoin. So you've basically 10x'd it. So you had, instead of 0.02, you end up with 0.28. And then you can do that times $50,000. Yeah, 14K, I was correct. So 14,450. So by doing this little gas arbitrage against Bitcoin, you're turning $1,000 into $14,000 compared to $1,000 into 1,428. Can you see why I never, ever buy Bitcoin? I only go into Bitcoin when I want to store it, because during the bear market, it's all about Bitcoin retention, as in how much of your wealth is in Bitcoin, not in fiat. So in a bear market, yeah, I'll probably plop over to Bitcoin just to retain my Bitcoin holdings. But during the alt rally, which we're in right now, I don't want to touch Bitcoin because then you're being inefficient. So that's that. Peter Walton, what's the difference between margin trading and borrowing to invest? Aren't they the same thing? Yeah, they're pretty much the same thing. Except when you're margin trading on Binance, it's a lot more complicated. Seriously, it's just a lot more complicated. And you're borrowing, or it depends whether you do cross-asset or isolated, but it's just, it's very complicated. Martin says, no need to make your tax thing so complicated. Just send the cryptos to your wife. Creates a taxable event for you to crystallize the loss, but no risk of the price moving while you're messing around with a fiat. You can't gift people a lot of money, mate, without a huge tax implication. I can't just give my wife $500,000 or $1 million without there being a big old tax. So yeah, just be careful. There's only so much you can gift. So, silly question, but based on the Aave loan example you gave, how does one pay the interest back to Aave? You simply, so in that example, I don't know where it's gone. Oh man, I've done so many little drawings here. Aave over here. So in this case, you borrowed 5,000 DAI. Get one DAI, basically a DAI is a dollar. So here you borrowed 5,000 DAI. So you take the 5,000 DAI, put it into Bitcoin, Ether, whatever, you grow it. You then sell 5,000 DAI, and guess what? You just give Aave back 5,000 DAI, and then you got your 10K's worth of Bitcoin back. You can't see what I'm share screen, sorry. So here we go. You borrowed 5,000 DAI, and in order to liquidate your loan, you just got to pay Aave 5,000 DAI back, maybe plus a little bit more, and then you get your Bitcoin back. That's what happens. How long is it? Shit, we've been talking for an hour and a half. Right. Tom Green, surely your Bitcoin now positioned as crypto gold. Why would it not keep outperforming things like gas? So, what was I going to say? Yeah, so basically, in terms of percentage growth now, Bitcoin's going to slow down massively. So here's the thing. We'll see huge amounts of capital flowing into crypto, like trillions of dollars now. But in percentage terms, Bitcoin's not going to grow much. I mean, let's say I'm correct. And we, by January, we hit $150,000 Bitcoin. That's basically 3x from here. Whereas if that does happen, in order to 3x Bitcoin, we're going to need to see at least $3 to $5 trillion flow into cryptos. Now, let's put it this way. I'll show you why. Let's find coin market cap. Right. So there's, oh man, it's going to be a bit tricky here. Okay. So first of all, we're just going to have to do a little assumption. Okay. So the average price of gas is 25% of the price of NEO. Okay, that's the long-term historical thing. And I know NEO 3.0 has different tokenomics now, but doesn't matter. So let's just go back to CoinMarketCap and look at NEO. So right now, as a percentage of the whole market cap, so it's 4.9 billion out of, let's do this. So 4.9 divided by 1854. 1854 equals times 100. So right now, NEO is 0.26% of the crypto market share. So now NEO 3.0 is launching, okay, later this year. Now, what we know of cryptos is that whenever a new mainnet comes up or whatever, you always see a run up before a new big event, okay? And if you go back to the heyday, NEO was at least easily 1% of the whole crypto market cap. So let's just say, and it's basically it's slightly dormant at the moment whilst it's getting ready. So let's just say it's 1%. Now, if So here's the first little assumption: 1% when it gets going, and that's high probability, to be fair, mate. Now, if I'm correct, here's the if, and Bitcoin 3x's from now, and it's just so a 3x from now gives Bitcoin sort of $120,000 market cap. So that's basically 0.7 times 0.784 times 3 equals 2.35. That would mean Bitcoin itself, just Bitcoin, has $2.35 trillion going into it. And assuming Bitcoin remains roughly 50% of the total market share, right now it's 42 and dropping, but let's just say it's 40%. Okay, so what you then do is you do this. You do 2.352, divide that by 0.45. Let's just call it 5. Let's say it's 50%. That means total crypto market becomes $4.7 trillion. Okay, so total crypto equals 4.7 trillion. Now, what is 1% of 4.7 trillion? This is where my maths fails me. I have to do it. 4.7 billion, 47 billion, 470, 4.7. Okay, there. Times 0.1. There we go. 47 billion. So what this means that NEO will then grow to a $47 billion market cap, which is 47 billion compared to now. Sorry, this is a long answer to your question, but you can see the maths gymnastics you have to do. So 4.9 billion. So basically, it's going to 10x. Yeah. So basically, it's a 10xing from where we are now. So for Bitcoin to triple, NEO is most likely going to 10x. So what this means, a 10x from this means NEO sits at $690. So you then look at the next thing and you go, okay, so NEO is at 690, if I'm correct. And then assuming gas is, call it 25% of that, that equals a gas, what was that, $172. There we go. And so so going back to your question, gas and NEO just have far more upside potential now than Bitcoin does. So another delivery. Where's my wife? She should be opening these. So that I've lost my train of thought. Yes, that's where I see happening with gas, and therefore it will be going up a lot more. Oh yeah, and then you can work out the price. So what is the ratio? $172.50. Divide that by $120,000 Bitcoin. That was where I was going. 1.50. Divide that by 120,000. 0.00143. Okay, 00143. Remember that. 00143. Let's go back to the chart. Where is 00143? 00143. Here we go. It's up here. 00143 is that level there. Now let's zoom out. There we go. And guess what? That is pretty much one of the levels where I'm looking at roughly of maybe getting out. So if it goes to 00143, let's go back to this. Where were the doodles? Here we go. Remember that $1,000 you got in at January, or like I got in January? You had 578 gas. We then do 00143, 00143. So that much gas times 00143. Boomtown, baby. Your $1,000 turns into 0.82 of a Bitcoin. and 0.82 of a Bitcoin. Remember, if this all happens, and let's say Bitcoin is 120K times 0.82, there we go. $1,000 turns into $98,000. These are all the little calculations I do, mate, when I'm doing my analysis. And it's what you got to do. 99% of all crypto dabblers out there don't have a clue about these sorts of, equations and stuff. And it's just simple. It really is simple. More patience Kryptonians. That's all you need to remember. Market cap over price times circulating supply. Oh my God, loads of questions. I'm going to have to skim through some of these questions. I'm so sorry. We've been talking for ages. Tara, good question. In arbitrage, how do you decide what is and what isn't undervalued to make the best arbitrage play? It's a good question because there's a nice, quick, simple answer. You don't need to do any research whatsoever other than looking at some charts. So let's look at this. So I've got ADA. I've got lots of ADA. I like ADA. As you can see, I've been buying in. I bought in originally 29 cents, then all the way up. Still buying. I actually bought a bit more yesterday. So the way to look at is ADA undervalued against Bitcoin, or you just find the chart of ADA against Bitcoin and just have a look. So you then zoom out. Okay, so at the moment, pretty much fair value. Well, it's medium. At one point, ADA is up here compared to Bitcoin, but now it's sort of halfway. Okay, let's look at another big one. Let's look at Binance. So Binance, BNB against Bitcoin. BTC. Ooh, okay, it's gone up massively. So it's like all-time highs against Bitcoin. So against Bitcoin, it's massive. Yeah. So if you got into Binance down here and then sold your Binance up here, you'd end up with way more Bitcoin. And so this is why, like, if you look at, I know, DOT against BTC. No, massively undervalued, but against Ether, so against Ether, it's undervalued, but against Bitcoin, it's higher than it has been, but it hasn't been around. Let's find something which has been around for a while. EOS, that was around back then. EOS, Bitcoin. So EOS compared to Bitcoin is massively undervalued. Look at that prime head and shoulders there. Can you see that? Textbook. Oh man, that is textbook to Anakobo. So not only did you have the neckline, which it punched through, it then came back to kiss it off before buggering off. So yeah, EOS is undervalued against Bitcoin. So that's how you look. You just basically go through a whole bunch of charts. Let's look at Doge. Everyone likes Doge. I actually bought a Doge t-shirt. You'll see that soon. Against Bitcoin. It's ridiculous. So Doge, literally all of its life has sat within this band between here and here. Then all of a sudden it goes viral and now it's massively overvalued. It's just nuts. Insane to the membrane. Right. That's the answer to that question. Now I've got to look at the YouTube chat. Hey folks on YouTube, good to see you. Geez, 83 on YouTube, 55 on Zoom. A lot of people have left Zoom, but yeah. Love a new setter. Oh, cheers. Great chats. Cool. Do you feel it just all seems too easy in terms of predicting the bull cycle? A lot of people seem to be on a similar page, but do you think the market would just play out as everyone's expecting? Yeah, it's a good question, Richard. So two things, because everyone is thinking, a lot of people are looking at stock to flow. So there's one way to argue that it will just become a self-licking lolly, or a self-fulfilling prophecy, sorry, is a better term. And that it will happen because everyone is going long and holding for that long, and therefore price goes up. But you also then have to be careful of people front running it. So if, big banks could be going, oh, everyone's looking at stock to flow and everyone's probably going to sell at $100,000 Bitcoin. And therefore the market will get to like $89,000 Bitcoin and then sell off. Meanwhile, everyone's sat there holding out for that 100K and it never comes. So it's a tough one. It's a toughie. If you want to be safe, just take out profits along the way. but I'm hodling. Richard, I'm thinking more of a double top cycle this time round, possibly. Yep, I agree, as I can't see it getting high enough this year and just replicating what happened in 2017. Yeah. And each new cycle seems to take longer with less growth. Yeah, of course. I mean, it's a bigger asset now. So we're not going to get another 5.2 million% growth over the next 10 years. Hell, but what about if we get 100,000% growth from where we are now? That's huge. So Indy, I'm a bit worried about things that are hovering around the 200 EMA on the daily chart. Whatever, doesn't matter. Stick to the fundamentals, as I said at the beginning of the video. Lucid, I tell people about going for low risk, high reward trades. They think I'm joking. Joke's on them. Yeah, literally, the joke is on anyone that has zero crypto exposure. And even if you get it wrong, as long as you hold, time is your friend. Interested in ETH as well, yeah. Any questions? John, please do an interview with an economist. I'll happily do it. I will happily do an interview or a debate with anyone as long as they don't get emotional. I don't like emotional debates because people then get their heckles up. It's just, yeah. I love, like, this is why if you looked at the live chat yesterday, it was great. And the day before, because we had a lady called Anita that strongly opposed one of my views. She thinks that all wealth should be equally distributed, which is something which I don't agree with. But we can have a nice adult conversation because she didn't get emotional. I don't get emotional about anything. So, yeah. The only time I think I get emotional is if a loved one dies. That is, yeah. Everything else is just like, yeah, whatever. When Pips, my dog, dies, I'm going to be inconsolable for like a year. Okay. Any questions over here? Okay, no questions. Oh yeah, Lucid. What do you think of the Matic to ETH ratio now? Let's have a look. Share screen. Matic has just been on a tear, hasn't it? Matic to ETH. Yeah, Matic is massively boomed against ETH. Matic to Bitcoin, that will most likely have boomed as well. Matic is relatively new, so we're not going to get much data against Bitcoin. Oh no, it's not. Yeah, 2019. So look at that. It looks like the Bitcoin Doge chart against Bitcoin. So this is why, like, I'm not going to share how much my crypto portfolio is, but the reason, like, because I don't have Bitcoin. What did I start with? It's 3x. Yeah. So because I've done my Kryptonian portfolio where I've got a whole bunch of solid players and smart tracker and all sorts of, and a few little punts, etc. My Bitcoin value has tripled. So if obviously, let's say I started the whole portfolio with 1 Bitcoin worth of portfolio, now it's tripled. So now it's gone up to say 3 Bitcoin. And that's because pretty much every single coin I have has dicked over Bitcoin, literally. So if you look at all of these coins, this is every coin I have. So you look at any one that I've had for a while. So let's look at VeChain. I got in VeChain down here at 0.2 pence, basically. If you now look at VeChain against Bitcoin, oh, hello. So go back to January. So down here, effectively against Bitcoin, it's absolutely destroyed Bitcoin. Hence my Bitcoin value going up. I'll do one more, which has been around for, what have I bought originally on the first bunch? So I bought gas. Yeah, we've already seen that one. What else did I buy? Theta. Let's look at Theta. So I got in at Theta down at $1.81. It's now at 7. I mean, it did hit 15. But look at Theta against the Bitcoin. Theta BTC. Going back to January the 12th, it's absolutely destroyed Bitcoin. Hence, my portfolio has tripled in the amount of Bitcoin I have. So that's why I never touch Bitcoin during a bull market, just because it's so slow. And it's another reason I'm out of Ether right now, because it's getting too big and therefore it's going to get slower. Although I still believe Ethereum will hit $10,000 easy. And I also think it'll hit $20,000 given enough time. So I think we're going to have to start calling it a day. Rob said, did you see my question on automating entry buy, stop loss, and entry sales on cryptos? Yeah, I answered it earlier, mate. Also, I didn't talk about the automating bit. No, I just prefer to do things manually for crypto. And the thing is, I'm not actively trading. I'm sort of buying and hodling. And I just do, the only real trades I do with crypto are when I see my, do my side steps. So where's this? So I have my watch list here, and all I do a few times a day is I look at the percentage change, and I'm not doing it at the moment because after this is just a normal bounce back. But typically, when something hits like 30% plus up in a day, I'll get out. I'll sell. So if you look at Filecoin, I've done this a few times, where like, so here's one I remember. So this bar was like a 40% growth bar, and I saw that, and I was like, oh, cool. I saw it a bit late, or no, I saw it up here, but I acted too slow, and I got out at $88. So I sold out, and then I put a buy order in somewhere down here, and then boom, I end up more. Yeah, so I turned 76 Filecoins into 87.50 Filecoins, so 15% more coins. And then I did it again later up here. So that was a big old 30% bar. Sold up here, got in back down at 170-ish, and therefore I turned my 87.5 Filecoins into 98. So when you look at that, just by doing these little side steps, that's the only trading I do. So what is 98? Where's my calculator gone? So 98.83 minus 76 divided by 76 times 100. There we go. So just doing these little side steps, I've got 30% more tokens than just by doing side steps without adding any extra money in. So 30%. So what was the actual number? So I had 98.83 minus 76. So in total, I've managed to get an extra 22.83 Filecoins without adding any extra money. And if I had added extra money, like obviously back here when it was 170, I'd effectively got an extra $3,800 worth of Filecoins just by doing side steps. So that's the only trading I do. I don't do any margin trading. So I'm definitely not shorting crypto. You're going to be a nutter to short crypto. So yeah, I'm in USD when I'm doing the side steps, mate. I mean, it depends. Actually, you can do it in Bitcoin. And I do it in Bitcoin as well. Probably better to do the side steps in Bitcoin, mate. So actually, what I should do, in fact, you just reminded me. What I actually should do is in my watch list, duplicate every one of these against Bitcoin. So that way I'll see which ones are spiking against Bitcoin. That's, bit of a chore, but I think I'll have to do it. Right, I think I'm hungry. I haven't had breakfast yet. So, yeah. Has today helped? Please give me feedback. Have I just been rabbiting on too much? Have I been talking too fast? Has it been helpful? I see some old experienced people mixed with a whole bunch of newbies here. So, cool. Helpful, great session. Lovely jubbly. Mate, this is one of your best sessions. Thank you. Cool. Thank you so much. And for those on YouTube, there's probably here 10-year delay. So I guess the parting thing I want to leave you with is this. No matter how experienced you think you are, please, please, please go to YouTube, type Siam Kid into YouTube. Go to my channel. Now, if you want to do me a solid, click subscribe. Woo! But the thing for you, what's in it for you, is that if you go to the playlists, and then there's two playlists that I want to highlight here. So if you go, So these two. So there's one playlist, which is the wealth generation social chats. Every day I hold these these live sessions. All the recordings go onto here. Okay. So there's a huge amount of knowledge that you can pick up here, mixed with interviews and just me rabbiting on about stuff. And the other one is the free crypto basics video course. And there's like so this is the crypto course I made in 2017. A lot of it is outdated, but I thought I'd leave it there just so people can see whether it's aged well or not. And a lot of it's still valid. And you'll see a lot of predictions I made in 2017 that came true, which is pretty cool. So yeah, all that sort of, and all the recent crypto stuff is here as well. So yeah, if you like this stuff, subscribe to YouTube, and I've got to love you and leave you. Thanks, folks. Have a great weekend. Oh, by the way, heads up. I'm going on a little trip next week. My wife calls it a holiday, but really driving 8 hours down to Cornwall to an Airbnb with your kids, to me, is not a holiday. It's basically daddy daycare for a week. So I'm not personally looking forward to it. And we're leaving at like 1 a.m. tonight, and I'm doing all the driving. And then it's just going to be basically shit weather in Cornwall all week, looking at the forecast. So there won't be any live sessions next week, I'm afraid, because I am banned from working next week. Tom says, nah, Cornwall has its own microclimate. Oh, I hope so. I've got a mate that lives in Cromer, and he was like, why are you going to Cornwall? Just go to Cromer. It's the same. Anyway, have a good weekend all. Chill out about crypto. Seriously, if you are down, don't worry. It's fine. It will pick up. And yeah, have a good one. See ya. Bye.